I hope everybody's having a good day. I am pleased to announce our third and probably final public service loan forgiveness webinar with our guest, Scott Filter, who works for the Consumer Financial Protection Bureau. And Scott also has worked for the Department of Education, where he had a hand in putting together the regulations. So I'll go through, there's going to be Scott's information when we send you the slides if you're interested in getting the slides. But for now, I'm just going to hand it right over to Scott so he could start and let us know the information. Thank you, Scott.
Great. Thanks so much, Kathy. I'll give just a second for the slideshow to start. There we go. Good afternoon, everyone. As Kathy said, I'm Scott Filter. I'm a senior advisor in the Office of Students and Young Consumers at the Consumer Financial Protection Bureau. And previously, I worked at the U.S. Department of Education's Office of Post-Secondary Education, where I worked on federal financial aid regulatory policy. Thank you today for tuning into our presentation on public service loan forgiveness. This webinar is intended to help you navigate the process and recent updates to the PSLF program and how you might be able to take advantage of loan forgiveness for public service employees. Please note that as we go through this, we will talk a little bit about policy, and then I'll probably go through some Q&As that we usually receive about each topics. There will be times where it sounds like I'm very repetitive and repeat myself. Please know that that is deliberate. And it's important to get that type of information down, so we say it multiple times. So let's start with the CFPB's standard disclaimer. This presentation is being made by a CFPB employee on behalf of the Bureau. It does not constitute, however, legal interpretation, guidance, or advice, and any opinions or views stated during this presentation are my own and may not represent the Bureau's views. Next slide, please. Today's discussion will focus on PSLF, including how student loan borrowers can become eligible, how to apply, and then we'll discuss some recent changes to the PSLF program through the limited waiver opportunity. We'll also go over some additional resources and other materials to help you stay on track with paying back your student loans. Next slide, please. First, just a little bit about the CFPB. The CFPB is a federal government agency that works to improve consumer finance markets by making rules more effective, by enforcing those rules, and by empowering consumers to take more control of their financial lives. I'm from a division in the CFPB that focuses on helping consumers navigate financial products and services. We serve the general public, but we also focus on a series of special populations, including service members, older Americans, traditionally underserved communities, and students and young consumers. We help students and young consumers to prepare for financial decisions, such as paying or saving for college, managing their money, building credit, and of course, repaying student debt, all with an eye toward preventing student loan default or other negative financial events. With that in mind, we're going to talk about public service loan forgiveness, or PSLF. PSLF was established to encourage individuals to pursue careers in public service. Those who choose to work in public service often face substantial financial hardship and may not be able to repay their student loans over the standard 10-year repayment period. This program was designed to help those employees provide a service to the public and satisfy their student debt repayment obligations. Next slide. So what is PSLF? PSLF is a program where a student loan borrower can qualify for loan forgiveness by paying their loans for 120 months while working in public service for a qualifying employer. And we'll break down this definition and go over the qualifying criteria to reach PSLF over the next couple of slides. Under the original requirements of this program, to receive credit, you needed 4 things. 1, the right type of loan. It had to be a direct loan. 2, the right repayment plan. It had to be an income-based repayment plan. 3, you had to make an on-time payment while achieving number 4, which is that you are employed full-time for a qualifying employer. Now, it should be noted that an income-based repayment plan may result in a $0 payment. And if that occurs, that means that you will still receive credit for the on-time payment portion of the PSLF requirements, even though you're not technically making a repayment. You still would be required to meet the employment qualifications to receive credit, but you would not have to worry about the payment portion. To receive credit for PSLF, payments must be made on the same month that an individual works for the qualified employer to receive credit for that month. However, if you met the criteria in the past and have not received credit for it, it is not too late to receive that credit. You simply need to submit a PSLF form that includes that past employment that you have not received credit for yet. You may need someone from that organization to sign off for attestation purposes, but if you cannot reach anyone at your previous employer to verify your employment, the electronic PSLF form will prompt you on what to do as you fill it out. Now, what if you did not work for full-time for one qualifying employer, but you worked part-time for multiple qualifying employers? As long as the total number of hours that you work for all qualifying employers together is 30 hours or more per week for a particular month, then you can receive credit for it. You simply need to claim both employers on your PSLF form to get credit for each employer. And it is important to stress here that both employers must be a qualified employer. Additionally, others may ask if a cosigner meets the qualifications for PSLF, or if a parent paying off their child's loans could qualify for PSLF. PSLF is specifically designed for the borrower and focuses on the borrower meeting the PSLF qualifications. So in this example, the first thing I notice is that as federal direct loans, there would not be a cosigner because there's not a credit check on those loans. So if you have a loan where you are a cosigner, those are most likely private loans and you would not qualify for PSLF forgiveness. Second, if you are making payments for your child's loans, that would provide credit for the on-time payment requirement so long as you make them on time. But for the loans to be forgiven through PSLF, they would still need to meet the other requirements, which includes being the right loan and being in the right repayment plan. And most importantly, in this example, the borrower, which in this case would be your child, would need to be employed full-time for a qualified employer to qualify for PSLF. So remember, in that case, you would be making the payments, but your child would qualify through their employment, not yours. Next slide, please. Now, as we just stated, only federal direct loans can qualify for PSLF. So that means that private loans do not qualify for PSLF. Loans that were refinanced with a private lender do not qualify for PSLF. And spousal consolidation loans that are FFEL-based do not qualify for PSLF. Other types of federal loans, such as the Federal Family Education Loan Program loans, or FFEL, as I just mentioned, or Perkins loans also do not qualify for PSLF on their own. However, if you consolidate those particular loans into a direct consolidation loan, in which I should note that it's only FFEL loans in the person's name, not the spousal consolidation loans or the Perkins loans that you can do this with. And then under the new consolidation loan, that's a direct loan, you would be eligible then for PSLF. Now, under the traditional regulations, if you were to combine some direct loans with a Perkins or FFEL loan in a consolidation loan, then you would traditionally lose credit for any PSLF credit that you've already achieved under those direct loans. However, if you submit your consolidation loan application before October 31st, 2022, and I'm going to say that date a lot, again, it's October 31st of this year, and take advantage of the PSLF limited waiver, you can keep the progress that you've made on your loans and have them applied to all of your loans in the new consolidation loan. And we'll go into more details on this limited waiver in the next few slides. In addition to the Perkins loan and FFEL loans, Parent Plus loans also do not qualify on their own for PSLF. However, as with the other loans, a Parent Plus loan borrower can consolidate that loan into a direct consolidation loan, and by selecting the right repayment plan, can start to earn credit towards loan forgiveness. However, according to the U.S. Department of Education, a Parent Plus loan does not qualify for the limited waiver. The CARES Act, as seen on this slide, was signed into law in late March of 2020, and it codified a student loan payment pause that was begun by the U.S. Department of Education, which has now been extended through the end of this year. During this time, payment for all federally held student loans has been paused. And even without these payments, though, you are receiving credit towards PSLF so long as you still meet the full-time employment criteria of PSLF. On October 6th of 2021, the Department of Education announced for a limited time that borrowers can receive credit for past payments that would have not otherwise qualified for PSLF. With this limited waiver, if you have been working in public service but never explored PSLF, or you were previously discouraged from taking advantage of PSLF because you had the wrong type of loans or repayment plan, then this is the time to take advantage of the limited waiver and consider whether you want to explore PSLF. Next slide, please. Now, under this limited waiver, any prior payment will count as a qualifying payment. It does not matter the type of loan you have, the repayment plan, or whether the payment was made in full or on time. Now, under the regular program, you would have needed to make an on-time payment while working full-time with a qualified employer. This PSLF waiver provides some flexibility there, but when that waiver ends, you will have to return to making on-time payments while working full-time for that qualified employer to receive credit for forgiveness. You can receive forgiveness, however, even if you are no longer working for a qualified employer at the time that you apply for that forgiveness, or at the time that you actually receive the forgiveness later on. Now, this is a truly time-limited opportunity, and I said multiple times already, and we'll say multiple times again, it expires October 31st of this year. Now, to receive credit for past payments, you must take action prior to this deadline, and your next steps will depend on what type of loans you have, which we'll go into specifically over the next few slides. If you're unsure of what type of loans you have, you can log into studentaid.gov to find out more. And we'll go into that, and I'll show you exactly what to do later on in this presentation. And all of your federal loans will be listed after you log in with your username and password. And you'll need to know exactly what type of loans you have before you can move on to the next step to use the limited waiver. Next slide, please. Now, to qualify for PSLF, as we said, you must make 120 on-time payments while working for that qualifying employer. Any federal, state, or local government or military service or tribal government is considered qualifying employment, along with any nonprofit that is a 501c3 or an organization that provides certain types of qualifying public services. Now, prior to the last administration's negotiated rulemaking on faith-based entities at the U.S. Department of Education, individuals who worked for employers that were engaged in religious instruction, worship services, or proselytizing did not qualify for public service loan forgiveness. However, on August 14th, 2020, the Department of Education published new regulations on the PSLF program that clarified that and implemented specific approval for counting hours spent on religious instruction, worship, proselytizing, and fundraising towards the full-time work requirements for PSLF, which opened the doors for religious employees to be able to qualify for PSLF. Now, it only matters that you work for the qualifying employer. It does not matter what you do. As an example, if you work for a public school, all of the employees at that school would qualify for PSLF, regardless of if you were an administrator, an assistant, a classroom teacher, or other helpful staff, such as the lunch lady or a janitor. Now, your church will also qualify as an employer as long as it receives that 501c3 designation from the IRS. For most of the larger, more established denominations, your national organization most likely receives that through a central church office and then filters down to your particular church or diocese. Smaller churches without a larger national structure can still qualify for the tax-exempt status, but it may be on a church-by-church basis that they qualify for that IRS tax exemption. On the PSLF form, it specifically will ask you about your employer having that tax exempt status from the IRS, and you would indicate that your employer does and give that number. You should contact your HR office to determine what exactly that particular number you should submit to the Department of Education is. If when starting to fill out the application, the Department of Education's PSLF tool does not recognize your employer, please do not panic. It simply means that the Department of Education may not have previously processed an application from your employer, or that you've slightly entered it differently than how they have it in their database. The Department of Education staff will do some research on it and will add it after confirming its tax exempt status. To give you a personal story on the situation, my previous employer, as I told you, was the Department of Education, and I was also working towards qualifying for public service loan forgiveness. And once I had to submit the Department of Education to the department's tool because it did not recognize itself as a tax exempt status employer. So they did have to do research on themselves and add themselves into that. So I'm, truth be told, shown 100% verified that just because it's not in there is not the end of the world and may just take some time for them to update their sources. Now, if you're completely unsure about who your employer is and their status, the organization that pays you and is on your W-2 is generally considered your employer. So you should go to them for more information. Now, what about contractors versus directly paid employees? To qualify for PSLF, you must be an employee of that organization, which means that you will receive a W-2 from that organization at the end of the year to summarize your earnings. A 1099 is received for contracting work and is given for non-employee compensation, and specifically would disqualify you from receiving PSLF credit because it indicates that you are not a regular employee of that organization. Now, if you have any questions about whether your employer qualifies for PSLF, we recommend that you use the Department of Education's PSLF help tool. You may need to submit your employer, as we previously mentioned, to the Department of Education for review. However, if you do so, you should continue to move forward with submitting any other paperwork related to the PSLF limited waiver and not wait to hear back from them. It's important to get all of your paperwork in by that October 31st deadline. So if they are processing a review of your employer, you should still move forward and submit other paperwork. It does not need to be processed to take advantage of the limited waiver, but it does need to be submitted. And now the other thing to keep in mind is that you need to work full time. And that means that you must meet your employer's definition of full-time employment, or you must work at least 30 hours a week. Again, as we've mentioned before, if you're employed in more than one part-time job at the same time, you may still meet the full-time work requirements if you work a combined average of at least 30 hours per week with your employers, as long as they are both or all of them combined are a recognized qualified employer. Next slide, please. Now you need to make sure that all your payments count. So only payments made after October 1st, 2007 will count towards PSLF, since that's when the program was created. The department has not, however, published official guidance on how the PSLF will interact specifically with those employed by religious employers. So you want to follow the steps that I lay out in the rest of this presentation to have your case reviewed by your loan servicer. You do need the 120 payments, but they do not have to be consecutive. So if you started working in public service and then moved to a private sector position, you can always return to public service and continue to qualify for PSLF where you left off. Now, it's always good advice to keep a record of your payment history, so we recommend downloading a copy from your loan servicer and saving it for your files on a regular basis. We also recommend that you fill out a PSLF form with updated qualifying employment each and every year so that you can make sure that you are still on track. Now, if you have not filed a PSLF form to obtain approval for your work experience towards PSLF, you'll want to pay attention to the next two slides to know exactly what to do. If you have filed a PSLF form already, you should contact your student loan servicer to determine if your employment prior to the enactment of the faith-based entities rules have been counted for PSLF under the waiver. Next slide, please. So let's walk through exactly how to find out what type of loans you have. First thing you'll want to do is you'll want to go to the Department of Education's main webpage, which is studentaid.gov. And then once you log in with your username and password, now if you've forgotten those items, you can go through their process and retrieve that information. And just note that this login information may be different than the information that you use when you log in to contact your loan servicer. Now, once you're logged in, you'll see the screen that's on the right-hand side there that says My Aid, and it's a dashboard. And from there, you'll click on the View Details, which will take you to the lower screen that says either My Aid or Aid Summary. And on the right-hand side, you'll see a hyperlink there that says Download My Aid Data. And if you click that, you'll get a savable text file for your information. Next slide, please. However, if you just scroll down, you'll get an easier visual representation of your loan types. As you can see here, this individual has 2 consolidation loans currently with total outstanding balances. So you know that this person has direct loans. As you can see when you click on the 2 consolidation loans, this individual has direct consolidation unsubsidized and direct consolidation subsidized. Now you'll note lower on in that screen that they used to have different types of loans, as we mentioned, that would not qualify, such as Perkins loans, but those have been zeroed out when they consolidated, showing that currently they only have direct loans. Next slide, please. So now let's talk about how you qualify for PSLF if you already have direct loans like that person does. So if you logged in just like them and found out that you only had direct loans just like them, all you need to do is make sure that you submit a PSLF form with all of your qualifying employment. If you have not submitted a PSLF form, you should make sure to do that for all of your qualifying employment by October 31st, 2022, in a very short 2 months approaching. Now, if you've worked for several public service employers, you will want to make sure that all of your employers have been covered in a PSLF form at some point that you've submitted. And all of those forms, again, need to be submitted by October 31st. Special note here for Parent Plus loans. As we mentioned earlier, generally Parent Plus loans do not qualify for the PSLF limited waiver. If you have Parent Plus loans and want to learn more about PSLF, we do recommend that you contact your loan servicer to take you through the step-by-step of consolidating that loan. But the Department of Education studentaid.gov website should note 2 things about Parent Plus loans and PSLF. The first is that for Parent Plus loans, PSLF requirements around full-time employment at a qualified employer would apply to the borrower. So in this case, it is the parent who would have to have that and not the student, which is different from the previous example where a parent is just paying off their loans. For Parent Plus loans, the parent is the borrower, so they are required to be the ones to make the qualifying employment. And number 2, a plus loan may not be repaid under an income-based repayment plan, so it cannot technically qualify for PSLF under its own auspices. However, a parent can consolidate it into a direct consolidation loan, which allows it to be repaid under an income contingent repayment plan, which will then allow them to start qualifying for PSLF. Next slide, please. Now, what if you have other federal loans that do not qualify for PSLF? As we've mentioned multiple times, that those could be FFEL loans, they could be Perkins loan, or it could be a different type of federal student loan. Now, if you want to be considered for the PSLF limited waiver, you need to complete a direct consolidation loan application, again, by that October 31st deadline. And you can fill out the application to consolidate directly on the Department of Education's website. And we have that link for you here in the middle of this slide. And you must complete that application by the deadline, or else you will lose out on that opportunity to get past payments to qualify towards PSLF. Be sure to act within that time frame to get credit for those past payments. Now, if you do submit a direct consolidation loan application, as I've also said, do not wait to submit any PSLF forms to get credit for the past periods of qualified employment you may have. You must also fill out those PSLF forms with all of your qualifying employment information by October 31st to be considered for the limited waiver. Now, after the PSLF waiver ends, the PSLF program will go back to its normal parameters, which would require that to receive credit towards it, one would need to make on-time payments in full while working full-time for a qualified employer for having the right type of loan and the right repayment plan. The good news, though, for you all is that being a clergy member or working for a religious employer will still count beyond the waiver ending to receive credit going forward. Now, what does it look like when you actually receive credit under the PSLF program? Based on legislation that was implemented with the PSLF program, any forgiveness from the PSLF program is not taxable for the purposes of your federal income taxes. In most circumstances where one has forgiven debt, that forgiven debt is often considered untaxed income and is added back into your taxes. However, any canceled debt from your federal student loans under the PSLF program is tax-free for federal purposes. And also, just due to other legislation passed in the last year, any student loans forgiven for any reason is tax-free for federal income tax purposes for the next 5 years. However, that may not be true in all states. While most states do not require taxation on loan forgiveness, one or two might. Currently, we are aware that Mississippi and Indiana currently will consider any type of loan forgiveness taxed. And there might be a few others out there that have not yet made a determination. So you'll want to check with your state's treasurer's office to see if there are any state income tax requirements for public service loan forgiveness. Next slide, please. Now, this presentation has focused on the Public Service Loan Forgiveness Program and the limited waiver that the Department of Education implemented during the pandemic to provide extra flexibility to borrowers attempting to earn PSLF forgiveness. This forgiveness program should not be confused with the one-time loan cancellation program that the Biden administration announced on August 24th of this year. Under that program, an individual under certain earnings requirements could have either $10,000 or $20,000 for canceled, depending on whether the borrower received a Pell Grant when attending undergraduate college. To qualify for forgiveness, an individual must make $125,000 if they are a single tax filer, or they're a married tax filer filing separately, or they could earn under $250,000 if they are married filing jointly or filing as head of household. A current undergraduate student will qualify with the understanding that the Pell Grant requirement is attached to their financial aid award, but the income thresholds are attached to their parents. Now, to qualify for loan forgiveness under this initiative, you do have to have direct loans, but that does include direct plus loans as well. A loan does have to be dispersed by June 30th, 2022 to qualify for cancellation. So students and parents who are borrowing for the upcoming year could not have that loan canceled, but they might qualify for loans that have been dispersed for the previous year. Department of Education also says that you can consolidate FFEL loans into direct loans to qualify for this program, and they'll go by the original disbursement date of those loans and not the actual date of the consolidation loan. Even loans that are working towards PSLF can qualify for this loan forgiveness. If you've only borrowed a small amount, your entire loan could be forgiven here, and then you would not have to worry about continuing to make progress on PSLF. However, if you've borrowed a significant more amount, you can receive this forgiveness here and continue on to and have the rest forgiven under the PSLF program. How do you get this forgiveness? For many individuals who have submitted recent financial information to the Department of Education for things such as renewing an income-based repayment plan, you will not need to apply for forgiveness. However, if you have not, an application will be available in October. You can sign up to be notified when the application becomes available if you go to the website www.ed.gov/subscriptions, as noted here on the lower left of this screen. On that website, you simply need to submit your email address and then check the box that says New Federal Student Loan Borrower Update. And then once that application is available, they will email it to you. Department of Education is still finalizing the details on this program, So your loan servicer may not be up to date on information yet. So if you have any questions, you should hold off on contacting them about this program for a few weeks until the department fully operationalizes the program. Next slide, please. Now, from doing this presentation to a wide variety of groups, we've created some frequently asked questions that we'll go through that will hopefully address most of your questions. Even though this is information that we've already gone through, it's always good to highlight it in the question and answer format. So our first question is, does COVID forbearance time count as a qualifying payment? And that answer, of course, is yes. As we said, payments that have been postponed due to the CARES Act since March 13th of 2020 on direct loans will count towards PSLF, even though that you did not make a payment. But it is required that you still have to have that full-time employment during that period of time to qualify for PSLF credit. Second question, do $0 payments on an IDR plan count towards PSLF? And again, yes, a $0 payment is still considered an on-time in full payment towards PSLF. But again, similar to the COVID requirements, you still have to have the employment requirement full-time for a qualifying employer to receive PSLF credit. Is there a limit on how much can be forgiven through PSLF? The answer is no. Any amount that you still owe after meeting PSLF requirements will be forgiven. And that could be whether you have a low amount or a very high amount. And final question for this slide, do you need to submit a PSLF form for each of your previous employers? And the answer is yes. You need to submit a PSLF form for each qualifying employer for which you want to receive PSLF credit. Now, that means that, of course, a employer that you had before that 2006 date, before it became an active program, you would not have to submit that because you would not have that reviewed for credit. But anything since the inception of this program, you would want to submit credit for to receive credit for the PSLF program. Now, if you've already received PSLF credit, will you receive a refund through the limited waiver? That answer is no. If either you've paid off your loan or you've already received some sort of forgiveness before the limited waiver happened, there will be no refund. If you still owe going into that waiver, they will pretty much just cancel off what you owe at that point. And do you have to be employed at a qualified employer at the time that you receive forgiveness? And that answer is no. Technically, the regulations do require that, but the Department of Education writes your period of forgiveness off at the period that you've reached your 120 marks. So once you've hit your 120 on-time payments with that qualified employer and sent off that PSLF form immediately, then you are free to gather other employment, and they do not look at your employment at the time that you've submitted that actual application or the time that you actually receive forgiveness. And our final question here, what if you can't get a previous employer to sign the PSLF form? And then when you submit the PSLF form online, and this is the definitely time I'd recommend that you make sure that you do it online, there'll be a prompt for you that if you can't get information from your employer, you click the prompt, and then the Department of Education may ask for additional paperwork from you, such as pay stubs or W-2s, so that they can verify that you're employed there or you were employed there. But you can still receive credit for employers that will not sign your form.